Good morning, everyone. Today is Monday, April 11th. I'm Marv Eisen of Timeless Dollar. And we start the day, as we should every day, as you should every day, looking at the economic calendar to see if there are going to be any announcements during the trading session that are going to tend to move the market. Today at 11, there are two announcements on the expected inflation rate. I do not believe they are going to be market moving. So let's move over then to the morning news. And I look at the morning news on CNBC. You use whatever news channel or source that you're comfortable with. And basically, I just want to get an overall view of the picture of the market, the complexion of the market. And flags are in the red today. 10-year note is at 2.73. Well, that's been going up very smartly for the past, or actually for the first quarter of this year. Dow, S&P futures, NASDAQ futures, all down convincingly. So let's move over then to the market. Now, this is the S&P daily candle. This is a one-day candle. And this is yesterday or Friday's candle right here. And as you can see, it opened and closed in a pretty tight range, although the shadows were significant, gave traders pretty good range of volatility throughout the day. At any rate, let's move over to the daily, to the one-day S&P. This is a 3-minute. This is the Emini, and this is a 3-minute candle. The chart for Friday, the 8th. Now, I want to make one point in this video today, and I know time is short, so I'm just going to make this very quick point. If you are a scalp trader, and scalp trading is defined as trading that lasts for a few seconds to a few minutes. If you're a scalp trader, you probably tend to trade more than you should. You probably overtrade, right? I know this is maybe a generality, but it's true for most of you. But I want to make a point about scalp trading. The market always tries to hide its intended direction. It always tries to hide its intended direction. And the proof is that for most people, the percentage of winners to losers is maybe 50-50. That's a symptom, or rather that's the result of the market fooling traders to thinking it's going to go one way when in fact it's going to go another way. So let me give you some thoughts on this. The market will always have a direction that it intends to go on a particular day. You might think trading is haphazard. It's not as haphazard as you think. But here's the thing. The market will always try to hide its intended direction. And it does that by doing two things. It either moves in its intended direction and then makes a counter move to try to fake you out of the trade, or it moves against its intended direction, trying to entice you to make a trade, and then trades again against you in the direction that it intended to in the first place. Does that make sense? Well, that's the reason so many scalpers get shaken out of their positions that would otherwise be good positions. So let me make a suggestion on how to deal with this. In trading, and I have a rule in my trading course, in my Emini trading course, that there's always another bus. There's always another bus. There's nobody forcing you to make a trade. So here's what I suggest. When the market opens, keep your powder dry. Wait until you see the market actually make the move it's intending to move. And here's a example on Friday, April 8th, where the market opened here at 44.86, and there was a good chance of a gap trade up here at 44.96 for a 10-point gap. But instead, if traders who jumped on at the open, hoping for a gap trade for a quick 10 points, they were disappointed because within, just a few minutes, they were down 15, 20 points. So those guys were shaken out of their trade with a sizable loss, I might add. But look what happened then. The market then reversed, teasing a gap trade, but didn't go and close the gap, right? It then reversed back down to the low of the previous few minutes, and then made its move up. And right over here, when it became evident that the trade was going to close the gap, that the market was going to close the gap, this was the point to jump on for a gap trade right over here, because over here, there was a pretty high probability over here that the gap was going to be closed. And there was no way to know. So there was a fake out in the early open. There was a tease, then another fake out, and then finally, it gave a clue that yes, indeed, I am going to fill the gap today. So that's my suggestion to scalpers for the day. Keep your powder dry. Wait until the market shows a definite bias toward a direction. In this case, the gap trade is always a good trade to keep your eye on. And then jump on for a few points. And if you're a one lot trader or one contract trader, I would suggest if you don't want to miss out on the big action, well, if you're exposing yourself to a lot more risk, then wait until the action is close to the target right here. Wait until it's close to the target and trade with multiple contracts. And you'll make just as much, if not more money, with the result also that you will most likely have a winning trade. So that's my advice to scalp traders for the day. If you want a little training on how to trade E-minis, check out my course at timelessdollar.com. I just instituted coaching sessions, half-hour or 1 hour coaching sessions that you can avail yourself of my time. I don't have a lot of time, but I'm making myself available on a limited hours basis. Check out my site at timelessdollar.com and you'll be able to see the hours that I have available. Anyway, trade safely. Have a great day. Monday, April 11th. This is Marv Eisen of Timeless Dollar, and I'll see you in my next video.